As the market sort of readjusts to the new reality on the economy, inflation, and the Fed?
Yeah, Sarah. I mean, I think the big question investors are probably asking is, what are we exactly wishing for? Are we wishing for an economy that is, so sturdy that it actually is going to require more Fed rate hikes to slow it down enough to get inflation in line? Or do we think that we're on the glide path where the Fed can be satisfied with just three? We're saying just three more quarter-point hikes. I mean, it is still going to represent an absolutely historic magnitude of tightening from the beginning of last year. And will the economy remain okay? I think the market, it's interesting. The stock market right now is not really priced for a recession. The bond market, the Treasury yield curve, you could argue is doing that, or is it just priced for a collapse in inflation in the second half of the year? I feel like no conviction that you have right now can override the next series of key data points we're going to get with PCE, see what the trajectory of inflation is with the jobs number for February that's going to come out in a couple of weeks. So all this stuff, I think, is healthy debate. We're sort of caught in the middle in the stock market, not cheap, but not super overpriced, and trying to make peace with this new level of bond yields. Credit markets, interestingly, remain relatively firm, but they've softened up some this month. That represents a slight tightening of financial conditions, but maybe not enough to do much to inflation.
Yeah, we're going to talk to Clarida in a few minutes, Mike, but he does have this blog post for PIMCO in which he does argue that the heavy work has been done by the Fed officials before. I think even he suggests they may start cutting rates before the end of the year.
Exactly. I mean, I do think if you pan out and look at the full scope of what's happened, absolutely. The Fed went from just about 0 to 4 3/4 at the high end of the current range in basically less than a year. There's not a lot more to do if you believe at all in the lags in Fed policy. You saw some Bullard talking about how the transparency of the Fed and the forward guidance that they've offered allowed the markets to reprice. The reason we have this inverted Treasury yield curve for so long at this point is because the market took short rates right up to where they thought they should be based on what the Fed was telling us.
Yeah, the age of forward guidance, as Bullard said earlier this morning. Good stuff, Mike. Thank you. Mike Santoli this morning kicking us off. Got a news alert on Meta. The company is responding now to this Washington Post piece suggesting that they're getting ready for another round of layoffs. Our Julia Borston's got details. Hi, Julia.
That's right. Meta's spokesperson Andy Stone just tweeting out, with all due respect, you got this one wrong, saying that the Washington Post headline saying that Meta plans to cut thousands more jobs is just not accurate. They do say that they have been consistently indicating that they will be doing more cuts, more tightening, but that the thousands number is simply not right. They have said repeatedly that they've been looking for teams